What's up, everybody, and welcome to the UTS Accounting Weekly Show. My name is Dr. Amanda White.
I'm Dr. Nelson Mull.
And it's week 3.
3 weeks
Yay!
in, yeah.
3
Exciting
weeks
stuff.
in
How
of
you
a
doing?
12-week term, 25% of the way
Yeah.
there after the end of this week.
So how's your
Counting
week been,
down.
man? How's your week been?
It's been pretty good. It's lovely weather, so I made sure I spent some time outside trying to, we're in this for the long haul, I think, this lockdown with Delta. So I'm trying not to overwork myself, unlike what I did last time. So how was your weekend?
It's great. I've got lots of sun, walking around my local LGA. So I'm fortunate enough to live in the city. So it's, see the harbour.
Get to go to Darling Harbour, deserted with no crowds.
Yeah. All that.
So it's still reporting season.
Yep.
And companies are still coming out with their results. That'll keep happening until, was it middle of September, roughly?
Yeah, next couple of weeks, it's just going to chug along.
So what are our big news stories of this week?
Okay, so the stock market, it's, like the last week, I think it's hit new record highs at least 3 times. So we passed what we were pre-COVID. So the stock market is at a new record highs. Today, of course, it's fallen back a bit, but not by a lot. So we're still at this, incredibly high level of valuation, which may surprise a lot of people. And I've had discussions with people where they've just been surprised that the market has been the stock market's gone up by so much when we're all under lockdown.
It's quite buoyant, and I guess we'll have to wait and see the next growth figures or the next performance figures that come out from Treasury, because obviously once you have negative growth or you have that stagnation for, I think it's more than 2 quarters, that's when we end up in a recession. So there is this question about whether, is this really a reflection of what's actually happening out there?
That's a great, yeah. So I guess, especially given recent lockdown. So Amanda, what do you think are the main reasons why the stock market's so high from an accounting perspective?
So, results are positive for most companies. They've figured out ways to work through lockdown, click and collect. And there's a lot of, pent up demand. Interest rates are very low. So people are paying off their mortgages, or if they don't have a mortgage, then they're considering spending on, eating out, or not eating out, but I guess more takeaway, buying more goods, when they normally would have spent a lot of that money that they might have saved on travel, vacations. We can't go anywhere. So they're looking for other ways to spend, but it's almost a bit too speed, because for someone like myself, I have a job I can do from home. And so my income has remained steady and my spending habits have changed somewhat as a result of COVID, because we can't travel, we can't go anywhere. But on the flip side, you need to think about all those people who might work in construction, casual workers in daycare, people who work for, authorized or essential workers in meat packing, food production, grocery stores, toilet paper manufacturers. So there's been a lot of two-speed where some people, their jobs are still safe, but if you're an office cleaner, then there's not a lot of work going around. And so you've moved to a government supplement, but you don't know how long that will last. So there's a lot of uncertainty. And so I think that it's almost 2 speeds. Some of us are spending up big with that pent up demand. Others are really saving their pennies because you just don't know when it might open back up or when it might close back down again. And for some people, that government supplement might not be enough to cover the majority of their costs, especially if you have kids, you have school, you have mortgage repayments. Obviously, the banks are giving people a hold on their mortgages. That's not going to last forever, though.
So I think there's definitely, I think it's interesting. The stock market almost factors in, if we're not spending money now, we're going to spend it later, inevitably. So the market even is factoring in the fact, that whatever money we do have now and we're not spending, we will spend. And so, stock market being forward.
And that's sort of, there's inflationary issues as well here. So as inflation rises, you expect that might eat into stock market returns, but we've seen no wage growth as well. Yeah. So, and part of that comes down to how inflation is calculated, the basket of goods. I'm not an economist, but I believe cars, the cost of cars is in the basket of goods, and car prices have gone through the roof,
Yeah.
but not everyone is buying a new car either. So it can be a bit complicated.
I learned that my car is almost worth as much as it was when I bought it like 6 years ago. Crazy.
That's amazing.
I know, right? That's the power of supply shortages and all that kind of stuff, which is related stuff. Anyways, so second story today, we'll talk about the CBA buyback. So CBA had a really great profit result this year, and they basically said that
Commonwealth Bank of Australia, by the way, for anyone who's like, who's CBA?
Yep. And so they plan to distribute $10 billion to shareholders via buybacks, $6 billion, and dividends, $4 billion. And so at this stage, the CBA has now reached a new record high, lingering around 100.
CBA is really significant, because I think I saw something on ABC News that half of all Australians bank with the CBA. They're one of our oldest financial institutions.
Yeah.
So this is really interesting news.
Yeah. So Amanda, why are shareholders so excited? Like, what's the accounting treatment that goes behind dividends and buybacks that makes it such a lucrative option?
So a buyback is a way of rewarding shareholders. It's by saying we're going to distribute some of our wealth from our profits back to you directly in something other than a dividend, because a dividend, it might be 3 to 5%, but here they're buying back shares. Now, how that's going to help shareholders is that key ratios and metrics like return on assets, return on equity, what you're doing is you're shrinking the denominator. So if you think about equity, so you're going to shrink the denominator, but the numerator stays the same. So overall, the ratio is going to look better. So, if you're looking at the financials, you need to take that into account. So that'll make things look better in the short term. And it also helps eat up some cash that they might have lying around.
Okay. So it's very much like the accounting looks better longer term because of the lower equity numbers. And if you have smaller denominators, fewer assets, lower cash, reduce equity from buying back shares, realistically, the profits you make in the future go to fewer people, right?
And so, it's a proportion. So nobody would sell all of their shares back, but they'd be offering to buy back, one share for however many X that you own.
Yeah. Okay. No, that's very interesting to see. And the last story we have is the push for companies to disclose companies that are receiving JobKeeper. So lawmakers in the Senate, in our government, are pushing the Australian Tax Office to disclose the names of companies that receive JobKeeper. So we have a situation where about 11,000 individuals were forced to repay JobKeeper because it turned out that in retrospect they weren't eligible. Whereas companies, they didn't have to do that, even though a few companies made massive profits. Think about that.
There's many examples. Yes, Jerry Harvey has said, "You're not getting it back. I'm keeping it."
Yeah.
Some companies did elect, due to union pressure and public campaigns, to give back their JobKeeper, but there is no transparency on this. And where it gets difficult is that it's not a separate line item on the financial statements. So it's going to go into other income, which could be income from non-core investments, from all sorts of other stuff. And the accounting standards don't require such a level of detail when it comes to other income that we would know how much went to JobKeeper. Now, the other flip side of this is also that some companies said that the JobKeeper money that they did keep, that perhaps they didn't need in the end, they've spent on staff costs when they went into a 3-day lockdown or a 5-day lockdown, because government support only kicks in for businesses and for employees once you hit a 7-day lockdown. So we've seen in other states, there's been like 3-day, 5-day lockdowns that were short and sharp.
Yeah.
And a lot of companies are saying, well, actually, we paid people over those periods so that they could still pay their bills. So it's a little bit a lack of transparency, which could create some real issues. The Senate ordered the ATO to do it. The ATO declined. So now we're just waiting to see next steps.
Yeah, so it kind of points to like this sort of double standard, right? That individuals, if you're a company and you made money, it's like, well, even though we're not going to repay it, we don't have to. And so, but if anything happens, then we have a backup. Whereas a lot of individuals, they don't have that same backup, right?
Well, the role of big companies is a really interesting question moving forward, because the government certainly must have a significant amount of debt for paying all of the additional job supplements, supplements at state government, federal government levels to try and keep people afloat during COVID. The question becomes, how do we pay that back? How do we pay back all of this? One way to do it might be to raise company taxes. And this is where the politics comes into play as well as the economics. And we have a federal election next year, which will be really interesting to watch.
Absolutely. It's going to be some interesting times. Okay, so why don't we just jump into the tip side of things? So,
great. What have you got this week for us, Nelson?
I thought about it and I thought, you know what, this is a really good time to form some good habits. So that is, find a time each week to, study certain subjects. So ensure that, you get, your 3-6 hour study for each subject every single week consistently, attending classes. And because I think, in this lockdown situation, it's so hard to just not have any fixed habits because you don't have to.
So easy to just sit in front of Netflix all day.
Exactly. So forming really good habits, I think, can really help you sort of be more efficient with your study, as well as get some relaxation time. So if you're really, scoping out a time each week to go for a walk, to have a chat to friends, and you can really achieve what you need to achieve in a week and not feel like, you're missing out on anything. So that's my first tip.
And planning it in advance is important as well, because it takes, I think it's 40 days of doing something every single day to build a habit. So don't think I'll just do it for a week. Plan that out in your diary for 40 days.
Absolutely. And the other thing I thought about was, forming virtual study groups. I think it's really difficult to just study at home by yourself, especially when you're not under any sort of major time pressure. So if you could get a few friends together and say, let's for 3 hours a week, on a Tuesday afternoon, let's go on a Zoom call and let's just study, especially, a subject, if they're studying the same subject.
Don't even have to talk for those whole 3 hours, right? You could just sit there and just do your own work.
Yeah.
And then if you have a question, you might say, oh, hey, stuck on this piece of the homework. Yeah.
Absolutely. So I love the idea of virtual study group and just connecting with people on a regular basis, just to, keep your connections with people, as well as, get some study done. Amanda, what do you have this week?
My other one, and I really love the study group one. If you're having trouble finding a study group, you could ask on a UTS discussion group on Facebook, ask on the discussion forum on your Canvas site. I know there's plenty of students looking to form study groups. The risk there is don't share assignments, because you might be pinged for academic integrity and academic misconduct. So it's just something to be aware about. But the other one is to volunteer as a helps buddy. So we have a significant number of students offshore. If you're looking for ways to build your LinkedIn profile and your CV and your experience, one thing you can do is volunteer as a helps conversation buddy, and they will link you up with one person where you can have a one-off or a regular 30-minute chat to help that particular student studying offshore practice their English. In talking with lots of students, quite often the only time they get to speak to someone in English is in class, and often then they haven't been practicing, so they're too afraid to say anything. So the Helps Conversation service, and if you just Google Helps Conversation Buddies, there'll be a link to sign up on the UTS Helps page. That could be a really great way to give back, help out another student, make a new friend during our lockdown.
Yeah, that's such a nice thing to do as well. And I think, at this particular time, if you don't have the opportunity to go out and do things you normally do, and you have this extra time, why not just sort of use it in a more productive way, connect with people.
Could even be just a 15-minute conversation a week. It doesn't have to be about uni. You could, just talk about movies or sports or things that you like to do, whatever it is, or just get to know that person. It can be really simple.
Any closing remarks?
Closing remarks. Okay. So we're heading into week 3. Keep going to class. Of course, if you have any questions that you want to ask of us, administrative issues or anything, then please get in touch. You can Google either of our names and find our contact details, or ask them in the comments below. But thanks for watching, and we'll see you next week.